Aniston, Manager of Partnership Programs for the NFCC, and your host once again for today's Financial Facts Chat. Thanks for joining us on Facebook and YouTube. We're really glad to have you here. If you do enjoy today's show, please like, comment, share, and subscribe. That keeps the channel going. And I'm joined once again by Bruce McClary, SVP of Communications at the NFCC. Bruce is back once again and ready to answer your questions. How's it going, Bruce?
Hi, Rachel. It's going great. Got a lot going on, but spring is finally here. This is actually our first show after the start of spring. This is the first official spring episode.
Yes. I can't believe we're already at spring. Where has the time gone?
I know, it's crazy, right? Right? So much time has gone by so quickly, and we've covered so much ground over the winter, and now it's gone. But it's spring, and for those watching live, by the way, I mentioned this the other day in a staff meeting, but today is National Cute Puppy Day.
So, excellent.
And it's also National Chia Pet Day. So if you want to do a mashup of the holiday, you get the little puppy chia pet and you water it a little bit, and you've got yourself a cute chia puppy.
Excellent. I love it.
So good way to celebrate, and affordable too. Actually, no, puppies are not that cheap. Scratch that.
Yeah. They've got a lot of expenses associated there, but
pets are not cheap. But chia pet, maybe. I don't know. You be the judge.
Well, I think we should go ahead and dive right into our questions because we have got a lot of questions today, and I want to make sure we have time to answer them all. Before we do that, I did want to remind everybody that you can always go ahead and ask your question in the chat box today during the live stream. You can send us an email. You could write a comment on one of our blogs. You could contact us as a comment on Facebook or YouTube. We definitely endeavor to make sure we answer all of your questions, so don't hesitate to reach out. We do have a lot today. And we kind of grouped them because we've got so many that were sent into our Ask an Expert. And our first topic that I think we got a lot of interest in this time around is around debt settlement. So let's go ahead and go through some of these questions, Bruce.
Okay, fire away.
All right. So we did hear from a man who lost everything due to business failure, which led to homelessness. This person's back on their feet. They might be in a position to settle their debt, but they want to know how to go about negotiating. So that's our first topic on debt settlement. Our next one is from a woman who had their car repossessed and settled the remaining debt. She is curious about whether settling debt is harmful to your credit and wants to know about some ways to rebuild credit after a settlement. And our last question on debt settlement today is, we have heard from someone who successfully negotiated a settlement, but they're having trouble getting the agreement in writing. I went through all those pretty quickly, so let me know if you want me to repeat any of them, Bruce, but I'm going to turn it over to you for your insights.
We'll take those in order. And I guess the first thing that I want to mention is about that first question from the gentleman who ran up debt, lost a business, ended up homeless. I just can't even imagine. I mean, that's, having gone through that and then getting back to a point where you can now say, okay, maybe I can start to try to resolve some of these debts that fell by the wayside during this horrible period of time. That's a significant rebound if you think about it. If you go from being a small business owner to experiencing some kind of a disruption that sends you into homelessness, much less losing your business and all of these other things that are important to you, and then you're able to get back to a place where you're on somewhat firm financial footing and you may be able to negotiate a settlement. I got to tell you, to the person who wrote that, I'm in awe of your resilience and your ability to bounce back, because where you are today had to take a lot of determination and a lot of effort, and probably took a tremendous emotional toll on yourself personally. So congratulations on getting back to where you are today. That's the first thing I would say. In terms of negotiating a settlement, you know exactly how much money you have set aside and what your objective is, and you know how many creditors you owe, and you know how much you owe them. I guess if you're gonna put together a strategy about how to approach that situation, the first thing I would say, first and foremost, is make sure you have enough money to take care of your basic needs if you're going to start settling your debt. If you still have issues where your financial situation is a little bit uncertain, don't commit that money that you have set aside for savings for emergencies and basic needs to whatever you intend to do for the settlement. So just make sure that you're okay before you start working on getting the creditors to the right place. The second thing is, I would encourage you to access your credit reports. Pull a copy of your credit reports. You can get a copy of your credit report for free from annualcreditreport.com. And during this period of COVID recovery, the credit bureaus have expanded free access to include weekly access at annualcreditreport.com. And you can do that until 2022. So go there, get a copy of all three of your credit reports, and look at the status of those accounts that you owe to see how far down the road they are with collections. If they haven't already taken you to court to sue you for the money that you owe, if it hasn't gone that far, then there's a good chance that you can go back to them and work out some kind of a settlement. Don't tip your hat exactly when you're negotiating as to what the limit of, like, how much money you have set aside. Make sure that when you're negotiating, you're asking the questions of them about how much you can settle, how far down they'll go on the percentage, and what kind of a lump sum is required. Don't tip your hat and tell them, oh, well, I've got, $10,000 set aside. Especially if you're dealing with individual creditors one by one, because you need to map out exactly how much you want to set aside for a settlement for each of those different creditors, assuming you don't have all of your accounts with one creditor. So that's the one thing that I would mention. And then just be persistent. You may not be satisfied with their response when you first start the negotiation, but it's okay to cut that conversation off and step back and use time as an ally and let them sit and think about it, and then go back to them again and say, well, have you changed your mind? Is there anything different, et cetera, et cetera, et cetera. But it's possible for you to negotiate a settlement under those conditions. Just you be the one asking them how far they'll go, and make sure that you guard the information about the limits of your financial resources right now, especially since you're in a precarious position because you're just rebounding from a very, very significant setback. The other thing is, don't think you can't do this by yourself. If you were a small business owner, so I imagine you have some pretty good negotiating skills. You don't necessarily have to go hire somebody to settle the debt for you. You can do it yourself. So I would say try that path first. And it may also help for you to talk to a nonprofit credit counseling agency about your budget. Just talk to them about your budget and managing your resources, and get yourself a clear picture of what your financial roadmap looks like going forward. And maybe you can also, that can help you have a better idea of what you want to settle on each account and how you want to approach that as you do the negotiating for the settlement. But good luck with that. And congratulations again on getting back to where you are. The other question was from the woman who mentioned she had her car repossessed. Is that correct?
That's right.
I'm losing track.
She had her car repossessed. She settled the remaining debt, and she wants to know, what's the impact of settling debt on your credit score, and what are some ways to rebuild credit after a settlement?
Okay. Yeah, that okay, so first of all, repossession is definitely not something you want to have ever happen if you can avoid it. So that's a setback right there for you and for your credit. Having the account fall so far behind that that the car is repossessed, that is also something that's unfortunate and can have a negative impact on your credit. But settling the debt, so you've settled the debt. And now you're looking at what you can do to rebuild your credit. If that's the case, the golden rule, the absolute golden rule, is to replace the bad information of the past with something good in the present. So any accounts that you have that are on track, that are up to date, that would be those would be the accounts that I would say focus on those. Try to keep those up to date, pay those on time, make sure that they are in good standing. The other piece of this is to open up new trade lines that allow you to establish a healthy payment history. So if you don't have any open accounts right now that you can maintain and keep on track and replace the good with the bad, I would say make sure that you look for opportunities to open up a new account and have good payment, healthy payment history, replace the bad payment history of the past. There's an easy way to do that that doesn't require a credit check. You can open up a secured credit card, and the amount of the credit limit is based on the security deposit that you put down as collateral to open up the account. But you don't have to get a credit check. So the repossession, the debt settlement, all those things that were bad on your credit report aren't going to lead to a rejection. So you can do that. Or if you have a bank or a credit union that you work with, they may be able to give you some kind of a starter credit card or line of credit that takes into consideration your credit score and your credit history, and gives you a way to reestablish your credit history through a new account. You can also work with an organization called Credit Builders Association, CBA, and their members offer starter credit loans and rebuilding loans. So you can get a loan or a line of credit that helps you rebuild, and they offer responsible interest rates and affordable terms to make it easier for you to reestablish your credit. But so guard your territory, make sure nothing gets worse that may be in good standing, and replace the good with the bad. That's my advice under those circumstances. And the last one was from the person who's negotiated a settlement, but they're having trouble getting the confirmation in writing.
That's right. Yeah.
Oh boy. It's first of all, congratulations for successfully negotiating a settlement. That proves the point that we make that you can do it yourself. You don't have to go to some third-party debt settlement company to do it for you. So to the person who wrote in the question about negotiating debt settlement and getting it in writing, negotiating is the hard part. So you've succeeded there. Congratulations, you've negotiated a settlement for yourself. Sounds like the bad news is the people that you negotiated with don't want to put the agreement in writing. So this goes back to the advice that I've always given before, which is if they're not going to put it in writing, what you've negotiated there's no record of that is tangible that you can hold in your hand if they ever back off of the deal, and you can say, aha, but you said this. So I'm hesitant. I'm hesitant to tell you to go forward without something in writing, because that kind of goes against the advice that I always give. One thing that you can do to prime the pump a little bit, and it's kind of passive aggressive, but it works. Send them communication in writing, basically that says, per our conversation on date and time, I'm following up on the settlement agreement that we agreed to, that we discussed over the phone, and that you verbally agreed to, and then spell it out in there, and then ask for a reply confirming the terms of the settlement agreement. Send it via certified mail, or certified mail is what I would recommend, because somebody has to sign for it and they got it. Keep a copy of the letter for yourself, and then be persistent about following up on that letter. That's one of the things that I would recommend that you do, just so that you keep everything in writing. But don't move forward without something in writing. That's what I would say. I would be very cautious about advising that, because then they can turn around and say the debt wasn't settled. You'd have nothing to show that the agreement took place. And I've actually worked with people in the past who got burned in those situations and ended up holding the bag and had to go ahead and repay the rest of the balance that they thought was settled. So just be careful. Yeah. So what's the next question you got there, Rachel?
So our next question is, we heard from a couple who is trying very hard, but not having success figuring out why their credit score has dropped so far over the span of just one single month. They keep their debt ratio low, they pay their mortgage on time, they recently got a credit limit increase, and they opened a new account. So do you have any insight into what might be going on there, Bruce?
Yeah, there's so many different factors that influence a credit score from month to month. So a couple of things in their question offer clues as to what may be happening. And it's not completely obvious that, these things would impact your score, but they do. I think, they were talking about, first of all, they were talking about some of the good behavior that they had. They're keeping their debt ratio low. And you want to keep the level of your debt below 30% of your overall credit limit, just so that it doesn't negatively impact your score, so that you don't look like you're maxing out. So it sounds like they're doing good there. So congratulations. That is a good financial behavior that has a direct correlation to improvements in your credit score, or a healthy credit score. So they're absolutely right about being confused as to whether that might be causing their score to drop. It shouldn't, because that's good behavior. So let's cross that off the list. That's not a suspect here. But then they start mentioning some other things. So they mentioned they pay their mortgage on time, which is good as well. But they mentioned that they recently got a credit limit increase and open a new account. And you and I have talked about this before. If you open a new account, that means somebody's got to pull a copy of your credit report. That's an inquiry on your credit file. That causes your credit score to drop a little bit. Inquiries cause your credit score to drop a little bit. It's not huge, but it does make an impact. Opening up a new line of credit, it just by itself also causes a temporary negative impact on your credit score. So that can cause it to drop even further. So what it sounds, the thing that sounds to me to be the culprit is, it's not the paying the mortgage on time or the low credit utilization. It's the new account activity of increasing balances and increasing credit limits. And when you increase a credit limit, it means your appetite for debt is growing, which is sort of a yellow flag. And then when you open up a new line of credit, that sends the same message there. And that's another yellow flag. And then, of course, obviously the inquiries, when they pull your credit to approve you for those lines of credit and increases, those are hard inquiries. So that is another ding. So I think those are the things that are negatively impacting your credit. The good news is that those are temporary. So the effect of that will be temporary. And if you do all things that you should be doing, keeping your balances low, paying your mortgage on time, making sure everything is in check, you should be able to rebound pretty soon. But it seems like it all happened pretty suddenly. So it was kind of a shock based on making payments on time, et cetera. So the good news to the person who asked that question is, it's not as bad as it seems, and it'll get better, which is good. I like that. It's a positive way to end. So we have one more question?
We do. We've got one more. Our last question is regarding a mortgage that lingers on someone's credit report after a divorce, after they've had their name removed from the loan. They want to know how to get it removed they want to know how to get it removed from their credit report because their ex-spouse has defaulted on the loan, which is hurting their credit.
Yeah. Divorce can do a number on your credit. And I'm just thinking back to the days when I was a counselor and I used to work with couples a lot. And sometimes I would be working with couples who would divorce in the process of credit counseling. And then I would be working with them separately afterwards. And with a marriage, if you have joint responsibilities and then that marriage breaks up, you have to there's a mess you have to untangle. And there are a couple of things I want to mention that aren't directly brought forward in the question, but I think it's very important for people to know. First of all, there's an assumption when you get divorced that if the court says that you have to pay these accounts over here and that your spouse has to pay, or your ex-spouse has to pay these accounts on this side, that there's a clear line of division and that you're not legally responsible for those, even if your name is on them. That is not true. According to the creditor, the original loan agreement still stands and it's legally binding and you're both equally responsible if both of your names are on there. The court may have decided that your ex-spouse is responsible for full payment on that particular account, but if they drop off the radar, the creditor can legally come after you and collect the debt. They don't care what the court said in the divorce decree. So that means what you'll have to do is end up paying that to save your own credit and then go back and sue your ex-spouse for their part afterwards. I mean, it gets really messy. It gets ugly in these situations. But to go back to the question about the mortgage, if you're in a situation where you are no longer on the loan and your name is no longer on the mortgage, you should be able to take documentation of that and send it to the credit bureaus and dispute it to get that account activity off of your credit report, because that means that you're absolutely right in wanting to get it off your credit report, because your ex-spouse, their irresponsibility is now negatively impacting you, even though you were proactive and took the step to get your name off the loan before this happened. So you should not be affected by that. So you can go and you can dispute it with the credit bureau. You can provide them evidence of the account, the fact that your name is off the mortgage loan, and then they can take it back to the creditor, and then they can investigate with the creditor. If the creditor can't show proof that your name is still on the mortgage loan, presto, it comes off your credit report. They provide you with a corrected copy of the credit report after the investigation is complete, and there you go. Sadly, what's happened is that the error is really on the data furnisher, which is the creditor. So they're furnishing incorrect data to the credit bureau. So it takes a little while to unravel, and there is some collateral damage here. And unfortunately, that collateral damage is going to linger until this investigation is complete and it's resolved. So sadly, that's getting in the way of what you want to do and your goal to go out and get a new home or a new car or whatever you want to do that requires a credit approval. And that's an unfortunate aspect of this. But if you go ahead and get the process started, contact the credit bureau, file a dispute, get that process started, within 60 to 90 days, the smoke should be clear and everything should hopefully have been brought to completion. So, but don't wait. Get that process started now, and hopefully you have the documents that show that your name is off the loan. So it shouldn't be too much of a heavy lift. And if you want, and the other thing is too, if you go and you pull your credit report from annualcreditreport.com, each of the bureaus offers clear guidance on how to dispute certain account listings and everything. So you can just click through and get it done that way. It's pretty easy.
Thanks, Bruce. I think that's all the questions we've got today.
And I think we're up against time, aren't we? Pretty close.
Pretty close.
Yeah. So we have a challenge coming up, right? Well, we had a challenge and we have a new challenge coming up. So let's quickly talk about the last week's challenge and compare notes.
Yes. So our challenge from last week was to call our creditors and see if we could negotiate our interest rates, if we could get any sort of insight into how to improve our credit scores, basically just kind of report back on how those conversations went. Did you have any success with this one?
So I did. It was mixed success. And going into this, I kind of knew what it was like. But the reason we did this, folks, is because our own survey showed that very few people actually pick up the phone and talk to their creditor about the accounts they owe. And some of it might be just because you're afraid, you don't want to cause trouble by asking the wrong question. You don't want to have any repercussions against you if you bring up things that might be damaging. So I get that. I totally get the fear and the mystery. And talking to a creditor is not something everybody does every day. So people aren't comfortable with that. So we decided we advise people to call their creditors. Why don't we just try to do it ourselves? Follow our own advice. My experience was pretty helpful, but I knew that if you asked certain questions about making modifications to your account, that it could lead to a credit pull. And they'll be clear in the discussion that, okay, this will mean we have to approve you for a new line of credit. Do you authorize your credit pull, et cetera? So it stopped short of that. But what I was able to find out from them is that there are tools that I'm not even using that I wasn't even aware of on the account management website. So I actually used it as an opportunity to learn about these features so that I could go in online and I could access certain things. So having the conversation with the person by phone and giving them the opportunity to present these things, I think it was very helpful. They certainly seem to enjoy it because that's not the typical call that they get every day. So
Right.
it was a really helpful conversation on both sides of that. And I learned a lot about my account that I didn't already know, which makes me feel better about managing the debt that I owe and that account. But how was your experience? What did you end up doing?
Yeah, I was kind of dreading it because I was thinking I would be waiting on hold for a long time to be able to be put in touch with someone on their customer service team. That really wasn't the case for me. I just called the number. I had to go through their system and select from the option menus what I wanted, and eventually I was able to get put through to a customer service rep who picked up instantly. I really wasn't on hold for very long, and immediately they were pretty helpful. I did ask about whether they'd be willing to lower my APR, my interest on the card, and they kind of said, no, we don't negotiate that. So they were not really open to that. I think I suspect I could have pushed them a little bit harder to see what my options were. I think if I was really more adamant about wanting that change, I could have been a little bit more of a strong negotiator there. So I'd recommend if someone is trying to get that interest rate lowered, that you really kind of negotiate hard and have kind of a plan for how to deal if they come back and say they're not willing to negotiate.
But that brings up a good point, though, because and I've said this before, I probably say it too much, but you never know what you're going to get unless you ask. So don't ever assume going into it that it's not worth asking because they're probably going to say no. Let them be the ones to say no, but make sure you ask the question. That's what you did. So, now and they say, well, we don't negotiate. It's not our policy.
Right.
Which that's still, everything's negotiable, folks. So I don't, persistence is what really pays off. So you can still probably negotiate if you think you're in a position to. But here's a question that I have for you. And it's stupid because now I know the answer because of it relates to a previous challenge. But I was going to ask if you pulled your credit score before you had the conversation with your creditors, but I know you have. You've looked at your credit score recently.
I did. So I looked at it recently, I'd say within the past couple weeks for our challenge of checking our credit score, that we did within the past month. And then I thought, before I talk to my creditor, I'd like to get an even more updated view of the credit score. So I went online and I checked my credit score. So I kind of knew, what the baseline was. Not much had changed since I last checked it.
Okay.
The other thing, go ahead. What were you going to say?
No, I was going to say that. I was going to say, okay, well, you checked off the boxes that I would normally check because I never, if I'm going to even think about asking for lowering my interest rate or, increasing my credit limit, I absolutely want to know going into that conversation with the creditor at minimum, I want to know my payment history with that creditor. Have I been on time? And what my credit score is, because I know, pretty sure that they're going to be looking at that if it goes any further.
Right. And I think that's great advice. Know where you stand before you initiate the conversation, for sure.
Yeah.
Aside from that, I'd say I had a really pleasant conversation with their customer service rep. And after we covered the fact that they were not really open to negotiate my interest rate, which I felt, fine about, because I never have had to actually pay interest on my card. I'm very careful about that. So that wasn't a primary concern for me. It was just sort
Right.
of something that would have been a nice to have. After that, I started asking them about questions like, what other benefits does the card offer me that I may not be taking advantage of? And the person I spoke with was very happy to go over the card benefits and did alert me to some of the options that I wasn't actually aware of. And this is an interesting tip. I have a travel card. As a result of the pandemic, I haven't been able to use some of those travel benefits on my card. And because of that, my creditor has created these sort of temporary benefits that exist during the course of the pandemic, like, cash back for groceries that they didn't offer before. And it was really helpful to know that was an option, how I could redeem those things, how long those type of benefits are going to be in place. So you may have options on some of your cards that you're not aware of. And it's always worth it to check in, see what's new, see what's changed. I know that there's even some credit cards that offer sort of revolving options based on different months. That's always worth keeping track of. So in terms of benefits, it was very educational, and I think really had a positive experience there.
Yeah, that's a good point about benefits, because one of the things that my card offers is sort of like a revolving menu of different reward points that you can get with different transactions, and you have to go to the account management page to see those on a monthly basis and see what's new. And it's kind of like opt-in points programs. Like you would go and you would select and you'd opt in. And then if you spend your money at these particular retailers with that credit card under the terms and conditions of the rewards point program, then you would earn points and you could participate in that. But if you're not checking the account portal regularly, you miss some of those temporary options.
Right.
And those can be a great benefit for people looking to save money. And if you have a regular place that you go and buy groceries, or if you get gas at a certain place, and that becomes one of those revolving reward resources, then there's no need that you should have to miss that by just not checking your account. So whether you have a conversation with a person on a phone, which is what we did, or whether you just go to your account management portal and you look at what's new, it's just good practice. And it's good practice to be logging in and checking your account on a regular basis anyway, just to prevent from fraud and to report any transactions that you don't recognize that might not be the result of your activity. So whether you talk to somebody or whether you log in online, it's just good to do that. But if you haven't talked to your creditor recently, I encourage you to do that. They're actually nice people, at least based on my experience and based on Rachel's. It was a pleasant encounter.
There might be some benefits for you. You never know. So it's definitely worth setting aside. I think the whole process probably took me 15, 20 minutes to make the call, get connected, have the conversation. So I thought it was worth it for sure.
Awesome. Well, how do we top that? What's our challenge for next week? What do we do?
So next week, we're going to extend our timeline on this one, because this challenge is a little bit more time consuming and in depth than some of our previous challenges. But our next challenge is something I've always wanted to do and I've never done yet. And it is to have a session with one of our NFCC nonprofit credit counseling member agencies. So
awesome.
We're going to go and have a credit counseling session. And I'm really excited because I've worked with so many of our agencies, from our side on the NFCC. I think it would be really awesome to see what they do, with the clients. I've heard so much about it and never experienced it. So I'm really looking forward to it.
Yeah, this is going to be awesome. And I used to be a counselor. So this will take me back. This will put me on the other side of the conversation, which is kind of fascinating because, as many counseling sessions as I conducted, I never once really experienced it from the other side of the desk. I mean, it's a virtual desk now, but this will give me an opportunity. And it's also good too, because I think one of the benefits that's often overlooked about talking with a credit counselor is just to have someone else, another pair of eyes, but a highly qualified financial professional behind those eyes who can give you a different perspective on how you're managing your budget, how you're paying down your debts, what your strategy is for that, and how you're achieving your financial goals. They can help you set a roadmap for achieving your financial goals and making the most of that. So even if it is, even if debt repayment is not necessarily a crisis for you, there are a lot of benefits for talking with a nonprofit financial professional and having that discussion just in that initial touch point with a counselor. So this will be good. And it only takes about an hour, that first session, and you learn a lot. So I think we'll have a lot to report back on after we get that done. But we're going to have 2 weeks to get that finished. We got to set up an appointment. And that's actually a good thing because if you think about the demand for counseling and the available appointment slots, we may be able to get right in if we just call up. Who knows? But it will take a little bit of time to get this set up. So I'm looking forward to it.
Right. And I should also say, for full disclosure, some of our credit counseling sessions are funded by grants. We're not going to be drawing down on those grants for our sessions.
Yeah, we're paying full
transparency.
Freight.
Yes.
I'm glad you mentioned that. So we don't want to get in trouble.
Yes. As I manage the grants, I don't feel that I should be also drawing down on the grants on the other side. So
yes, thank you for that public service announcement. Well, this was good. Well, we had, for all the people that tuned in today, thank you for tuning in. We had a lot of great questions. We tried to pack them all in as best we could. But if you have more questions, and we are not live as we are now, you can ask questions by going to nfcc.org and go to our blog and use the Ask an Expert feature. And we answer all the questions. If we don't answer it here, we answer it by email directly to the people who ask, or we will feature it in a blog that posts on our website at a later time and inform the people who ask that the answer will be posted up to the blog. So we try to get to all your questions as we can, as long as they're about personal finance, debt situations, and things that we're able to address here at NFCC. Then we're happy to answer your questions. So.
And if you have any ideas on personal finance challenges that you would like me and Bruce to try out, please do let us know. We've done a lot, but I'm sure there's all kinds of financial advice out there that we haven't tried yet that we would love to put to the test. So we'll try anything within reason. Share your ideas with us if you have any.
Yeah, absolutely. We'll do almost anything you ask within reason and at our discretion. So that kind of all those disclaimers there. But anyway, subscribe, like, and comment if you like this episode. And we will be back next week. I'm thinking it might be Wednesday, but we've got to look at schedules. Things are getting busy. Mm-hmm. So, and I'm about to take a couple of days away. So thanks everybody for tuning in. Thanks, Rachel. It was an awesome show today.
Yeah, we covered a lot. Thanks so much, Bruce. Take care, everyone.
Take care, everybody.